Good evening, Nick Inman here from VolumeProfileTrader.com on Sunday evening, April 22nd, and we're going to do 3 videos tonight. The first is going to be on the broad indices, just looking at the market as a whole, top-down approach, and then the second video is going to be on some stocks that I think are going to work, or could work if the market continues to stabilize or trade higher. And then the third video is going to be on some currencies and look at that. So let's just jump right into the S&Ps here. Still continues to trade in this relatively tight range. Sent out a note on Friday saying the opportunity should be limited, and sure enough, that's exactly what happened. We had a small range within Thursday's range, and opening up this evening, we're in the same boat. But with that said, this range that we're in, and what I'm going to do is just connect the lows and kind of connect the highs here. And eventually this is going to resolve itself. And with the Fed, they have on Tuesday and Wednesday, they have meetings going to come out, and that should be the juice that moves the market and kind of gives it its next catalyst. And basically, if the market likes what it hears, we'll probably see basically some chasing in the market for a bid higher. And in my opinion, I think you look to sell into that strength. So if we make a new high, say the market trades up to 1450, I would be more inclined to trade it for a trade up to 1450 with expectations it's going to come back down. It's hard for me to look out that far as a trader, given the move that we've seen in the market. Let me zoom out one more time. Right here, a lot of good news for the meantime is baked in. Now, with that said, I think 80% of the earnings that have come out so far have beaten. So that has helped the market stay in the upper end of this range. Now we need to see if this market can break out. However, if there is any disappointment with the Fed, I do think that it could be a buying opportunity for those companies that are still announcing good earnings and they have good guidance, which is maybe the most important thing going forward. So looking at the monthly composites, we have 2 different pictures going on in my opinion. One is the potential for a lower high here. Oops, I have Fibonacci's on. So one's the potential for a lower high off of what is March's high volume area. You can see its resistance now. You can see the high volume, and you just take the extremes of that range, and they usually act as good support resistance levels. And then, so you have a lower high forming there, or I should say failure forming there, and a potential for a top. Now, with that said, I'm on a 90-day chart, and you have the point of control for the last 90 days at this 1365 level. Coincidentally, the lows from Thursday, 1365.50. Where's the point of control for the 90 days? 1365.52. Let's call it 1365.50. So that's kind of, in my opinion, the pivot you're looking at, and the reason why is because you can also draw, as I connected the lows in the prior chart, you can connect these lows here, and we're kind of coming to a head. Is this going to be, basically I guess you could call it a bear flag, where you have a downtrend, and then you have consolidation, and the lows and the highs are coming to an apex, and it falls out the end, and we make new lows, and we push back down to this 1340 level? Or is this, congestion, and this 1365 level is real support, and we're looking to break back above and visit new highs for the S&P? It's hard to tell, and I'm not going to act like I know. And that's one of the reasons why when this market broke down, basically my position, and hopefully your position as a portfolio manager, went from holding stock and buying on any weakness to selling into strength stocks that you're not interested in holding, and really raising some cash because there's uncertainty. A lot of professional money managers are sitting on the sidelines right now with not a lot of not a lot of action going on, kind of waiting and seeing approach. Anyone who says that they think the market's going higher, they know it without a doubt. They're fooling you. There's no telling, and that's why it's important to watch this current congestion level. Now, when the market is in a trend like this and it's just now breaking out, it's a lot easier to say buy the dip, buy the dip, buy the dip. But when we have our first real breakdown and we fail to rally back up and basically make new highs, that's when the sentiment changes, and you have to look at the market in a less bullish stance and realize that there are two sides to the market right now. With that said, it's important to stay involved in names that you like, names that you don't mind holding no matter the market condition. But there's also, a realization that maybe I should, stand pat for a little bit, wait for the market to tell me what it's going to do before I pile in or, have to sell basically where I should be buying because I held too much stock when it was telling me, I should be scaling out of some. So looking at the Dow, it's doing better than the S&P. It's in the middle of a range. It's bounced off the bottom. However, it does appear that let's put it this way. I'm more inclined to look to be a seller of the market. So if the market starts to break down, I think there's an opportunity, for example, on the S&P futures, whatever you like to trade, for market moves like that, whether it be individual stocks, whatever. I think there's an opportunity to press this down a little more. And I do think, for example, in the Dow, you could see 12,500, on the S&P 1340. And on the NASDAQ, well, let me finish with the Dow. On the monthly charts, which I have a bunch of drawings here that are irrelevant to me right now. Let me make this a 4-hour chart so we can see it better. Okay. Now, I'm going to connect these lows. And I guess you could... Nah, we're just going to connect these highs. And what you see is point of control for March. It's kind of the ceiling. That's how I view it. But you can see there's so much more volume down here. Basically around 1300 being the ceiling. So what I kind of see, just looking at this, is the potential for a head and shoulders pattern that's developing off of, a triple top. And this is just broad technical analysis stuff. I'm not saying that this is going to happen, but people are looking at this as a potential. So you have 13,250 on the top, down to, call it 12,700. So you would be looking for a 500-point move or so to the downside off of that. So basically, I'd be looking at close to break even on the year, and that's a pretty significant move on the Dow. Not saying that's going to happen, but there's that potential. Now, with that said, you just got the Dow's been outperforming relative to the S&P and definitely the NASDAQ. It's a quality thing, and you have to pick up on that as a trader. All right, the NASDAQ. This basically looks like Apple. What you have is a gradually declining indice that's around the 50 at the bottom end of the range. Talked about how if we broke below these lows, what was it, 2,700 or so, I don't remember what it was, that we should go and test 2640. We've gotten close to that. I would suspect that we still do it, with that said, though, you know, if the Fed says something that the market likes, this could be overall a good buy on the dips for the overall market. We have a pullback to the bottom of the channel within an uptrend. So you have to, you have to realize that the trend's still positive, and the longer term players in the market still, generally speaking, they're in for the long haul. So on major pullbacks, you're going to get buying anyways. So I guess I can do the volatility index too, just because, it's something that is related to the indices. Made a new low relative to this most recent range, closed right above the 50-day moving average. Basically what you'd be looking for is, are we going to trade back up towards 20, or are we going to break below 17, close below 17, and try to trade towards 15? That's the main thing, and we're just going to have to wait and see. So the next video is on some stocks.